So Danielle, the Fed has printed 22% of all U.S. dollars that have existed to date this year. Obviously, we are just way too far down this path to turn back now. That was the case probably a long time ago. So we're in a world of monetary socialism now. And I'm wondering, are we finally now at the point, Austrian economists and Fed critics have been predicting the demise of the dollar and the results and whatever the outcome will be for quite a long time. Are we finally at that point now where the Fed loses control of the dollar? And as Michael's saying, are we in a currency collapse, in your opinion?
I wouldn't say that we were in a currency collapse in real time. The dollar has not yet been pushed. It's the worst cliche I could use in response to that question, but we haven't gone far enough in the process. And part of it is because the capital markets are still wide open and there is still enough confidence in central bankers to keep this ruse alive, to keep the narrative alive. And a lot of investors are depending on doing just that. If that wasn't the case, we wouldn't have come into the year with about 78% of corporate debt to US GDP. And now we're going to exit the year, I just ran the math, at close to 95% of corporate non-financial debt to GDP. The end result of this is highly destructive, and not just highly destructive for investors, but it's highly destructive on a societal level, because when you pile on $2 trillion of debt onto corporate America's balance sheet that was overladen to begin with, what you end up with in the event that the stimulus is not able to produce what we call escape velocity for macroeconomic growth, what you end up with is a lot of companies that are way over leveraged that don't have very high recovery values. And that is why sometimes when we see such and such retail chain filed for Chapter 11 and they're closing all their stores. And what that means is rather than go through a restructuring in which a part of the company is retained, you end up having the entire entity destroyed because the Fed has managed to give so many walking wounded, so many zombies, 1 in 5 U.S. corporations. Fed policy has managed to give them lifelines such that they can, in the case of American Airlines, they can float a couple $1 billion of debt based on their frequent flyer program. You can collateralize anything, for heaven's sake. But when the time comes, therefore, for the inevitable, and they are inevitable, the Fed can postpone insolvency. It cannot indefinitely. It cannot forestall insolvencies indefinitely. It can buy companies time, but that's it. But my point is the time that is purchased puts more debt on corporate America's balance sheets such that when the time comes to file, you end up with liquidations, many more people put out of work than would have needed to have been the case had companies not been walking wounded and they restructured when there was still value left to be carved out of the company.
So Brady, I have a take on this, if I could.
Absolutely.
I don't think we're going to see a currency collapse. I wouldn't say that. I just think the currencies are all just going to get weaker. They're just sliding. And I mean, a reasonable expectation is the monetary supply expands by more than 10% a year for the next 3 years instead of, I think Saifedean says in his book, he says 7% a year for a decade. So I'm guessing got more than 7%. So let's just say 10 to 15% a year for the next 3 or 4 years. And I think that probably happens everywhere in the world. And, every government's going to sort through their issues, and there's going to be tons of complicated microeconomic developments of which I don't think any of us can divine exactly how they'll turn out. I think all we know is that rational investors with hundreds of trillions of dollars of money are looking at this saying, the only way I can hold bonds is if I think interest rates go negative. If they're not going negative, then buying a 30-year bond is like me giving you everything that I own, waiting to the end of my life, and you give back a third of it to my heirs after I'm dead. So that makes no sense, right? To buy a bond or a sovereign bond. And it's hard to buy real estate because half of it's impaired and no one can figure out whether our movie theater is ever going to be valuable again. It's a very complicated situation and scary situation. If you have a nice house, I recommend you keep it, right? if you had extra cash and you wanted to buy a beautiful house, this is a good time to buy it. So if there's something that you love, that you're passionate about, then you probably ought to buy it. And otherwise, you've got this extra monetary energy. It's hard to find debt. And so now you're down to precious metals or stocks. And the Fed and the central bankers have crowded everybody out of every trade. Like literally, the reason the stock market's going up and the gold is going up is because they bought up everything in the middle. So you either have to have conviction on gold, and there are people that have it, or I mean, you've got 1 billion people on the planet that think that Facebook, Apple, Amazon, and Google are, walk on water, right? And you can't blame them. I mean, they're the biggest success stories of a decade. So I think really what's going on right now is that the store of value for 1 billion people, or however many, has become technology stocks, and that just means that as the Fed prints more money, there's going to be a little tug of war. And I think over the near term, people will probably buy equities and stocks because it's easy to do so and they understand them. And I think over the long term, this is a time horizon thing, right? If you're looking out over the next decade, maybe 5 to 10 years, then yeah, buying technology is not a bad idea. Their fixtures are not going away. If you're looking out between 10 and 100 years, then you start to say, well, technology companies, they've got CEOs and central operations and competitors, and they've got countries that they've got to deal with, and they've got trade and regulatory issues, and a lot of complications and moving parts. They have to do a lot of things every year to be a store of value. Apple's got to keep shipping upgrades to the iPhone like the one they're doing today, and then the Apple Watch. And everybody's going to have an opinion about whether the new iOS or the new iPhone or the new Apple Watch was a good thing or a bad thing, and how the Chinese feel about it, and how we're going to deal with it, et cetera. Lots of complications. So your alternative, of course, to gold or to big tech is Bitcoin. And Bitcoin doesn't have complications. There's no CEO to disagree with. There's no board of directors. There's no one country. There's no central headquarters. It doesn't have to keep shipping new versions of itself. As it sits right now, the current functionality of Bitcoin is to store all the world's money forever in a fair and equitable fashion. And that's enough. I mean, that's what we want, right? So I feel that right now you've got a bunch of people, they all agree on one thing. Everybody agrees currency is getting weaker and we have to run to a store of value. They all disagree about whether the store of value is gold or big tech or Bitcoin. But if people think about it a bit, I think they'll conclude that technology is a crowded trade. It's run its course. And if you wanted to make a lot of money in it, you probably should have bought all those things in 2010, 11, or 12. And right now they've got as many complications as they have benefits as a store of value. And I think with regard to gold, as I said before, it peaked in the 19th century. In 95% of the cities in the world, they seized it in the 20th century. And if they don't seize it, then the gold miners will just make more and they're your enemy. So I can't see going back to a 19th century idea as a 21st century solution is very progressive. And that only leaves one choice, which is Bitcoin, which is a pretty good 21st century solution as a store of value. So I don't know what will happen in the next week or month, and I don't know what companies will succeed or fail, and I can't tell you what every country is going to do and whether or not you should short the dollar or go long the dollar versus the yen or the won or the whatever. And there are a lot of guys in the macro industry that care a lot about it and make a lot of money on it. All I can say is it seems pretty obvious to me that if your time horizon is 10 years or more, the store of value with the most promise in the 21st century, with the least complications to it, is Bitcoin.
This holiday season, give the gift of Bitcoin to your loved ones. Swan delivers your Bitcoin gift along with our world-class education and client service. Create a Bitcoin gift and wrap it with a custom message for your family and friends. Dash away with your gift. Your recipient will receive an email right away, that easy. Give the gift of generational wealth. Give Bitcoin.